The last component is price, right? So when we're talking about the last components being price, what are average traders doing within the market? Let's talk about that. Let's talk about what average traders do within the market. Can someone tell me, what do average traders do within the market? Use price to determine entries. Buy high, sell low. Okay. Okay. Go with the stream. Okay. Use price to solve for price. Okay. So what most traders do within the market is that they watch price, right? Most traders watch price and not what has created price. So they spend most of their time trying to study price instead of understanding what has created price, right? And then they end up making conclusions based on their studies of price in order for them to determine when is the most logical place for them to start making executions or make entries, right? Are we okay on that? But like, again, there is something that I've also like showed you guys. I said that like for us, we need to understand. Right now we're saying that like most traders, right? Right now we're saying that most traders study price. When we're saying that most traders study price, can you please give me one of the tools used to study price? Just list some, and then we're trying to get to that point. Just list some of the tools that are used in order for us to study price. The FIB, right? Trend lines, support and resistance, right? Supply and demand, MACDs, RSI. You can list all of the technical tools. And then whenever we are within the market and then we're not profiting, right? Bollinger Bands, whatever you can, as long as it requires price, as long as it studies price, then something about it tells us that like it's something that most traders rely on. So let's talk about this right now, right? Let's say that you started studying Forex and then you continue pushing and then you realize that you're getting more losses within whenever you approach the market, like your analysis gets violated and everything, right? So what do you normally do? What do you normally do? What do you normally do? When you realize that like, okay, the things that I've studied seems like they're not giving me what I want. What do? You go back and you say that like, maybe I didn't understand how to use these tools properly. That's the first step. You go back and study them and say that maybe I didn't understand how, like I don't understand how to use these tools very well. So the minute you say that you don't understand how to use these things very well, maybe that PDF I read it, I didn't read it very well. Maybe there's something that I'm missing. So you go back and study the very exact same thing in order for you to find what is it that is missing, something that you might have missed within the market, right? You start blaming the technical tools that you are using. Maybe I didn't study it very well, right? Instead of you trying to assess or say like, okay, if I am using all these things, the technical tools in order for me to kind of like find a clear understanding within the market, am I taking into consideration the time, volume, and open interest? Because like you are using price, you're using the last component of market structure in order for you to make logical decisions, but yet in the very same sense, you're neglecting time, volume, and open interest, right? So price is what most people focus on. That's what they focus on. They focus on price in order for them to make their decisions. So the most important thing is that you need to know what goes on behind price. And for us to say that we need to know what goes on behind price, how did we define price? How did we define price? How did we define price? There's a definition in terms of like how we define price, guys. Come on. Price, right, is the fruits of all these components coming together and working together. So when time, volume, and open interest work together, they produce price, which therefore price is a fruit, isn't it? And then again, we talked about that price is the receipts of the transactions that have been taken by more experienced, the receipts of the transactions taken by more experienced traders. When all of us come together and then interact within the market, what we create is that we create price. That's why we spoke about the theory of proofs. Remember that we talked about the theory of proofs. We spoke about price being an answer, but we're not going to be graded based on us determining the price or us determining the answer. We will be graded based on the steps that have been taken in order for us to get to that specific answer that is given, right? So for us to be in a position to profit within the market, we must exploit the changes in price as the market moves, right? So we are okay on that. So I hope you guys do understand all this